Milk is getting mighty expensive at the grocery store. Perhaps it's time to break it up into 4 easy payments. That's what we're here to discuss today on The Stock. I'm Xavier from the Dealing Desk, and I'm joined by Matt, Head of Clients. Matt, tell me, what's the stock?
G'day Xavier, thanks for having me back. The stock I'm watching today is A2 Milk, ticker code A2M. For those that don't know what A2 do, they are a dairy and infant formula company exclusively focused on milk products containing the A2 beta casein protein, and China is their most important market. The big news is that China's regulator, SAMR, has given the green light for A2 to sell infant milk under its own A2 brand in its Pekino manufacturing facility in New Zealand. Up until now, the company has relied almost entirely on a single supplier for formula, Synlait. Owning Pekino gives A2 a second source of supply and more control over its own future. And critically, it now has direct access to the highest margin part of the business, China. The board hasn't wasted any time. With this news, they've declared a $300 million New Zealand dollar special dividend. In Australia dollar terms, that's roughly 34 cents per share, fully franked, to be paid on the 24th of July. And that works out to a one-off yield of around 4.8% on current prices. The ex-dividend date is set for next Tuesday, the 8th of July, to be eligible for the special dividend. The stock has rallied about 33% through June on the back of all this news, but it is actually still down more than 22% for the year after the company trimmed FY26 outlook back in April on supply chain headwinds. So the stock has been moving around quite a bit.
It's a very interesting story there. So when a company, I guess, comes into this good fortune, they can decide, I guess, between doing a dividend or investing those funds into the company. Why do you think they've gone for the dividend rather than putting it back into A2 Milk?
Yeah, sometimes people will say that companies paying out large special dividends are low growth stocks or ex-growth. They made a big investment in Pekino, purchasing that from a China-based company last year for just under $300 million. So they've shown that they're willing to take the risk to invest for growth, and now they're rewarding long-term shareholders with the special dividend. So it's been really well received. Over to you, Xavier. What's your stock?
So I realized that a lot of the stocks I'd been looking for, I guess much like A2 Milk, were down for the year, which, given macroeconomic conditions and such, isn't to be too surprising. So I was keen to break that streak and look for something that has had growth throughout this year. And so I landed on Block Inc. That's xyz.ax, and it's also listed on the New York Stock Exchange. It's currently trading around 113 Australian dollars. And essentially, it's made up of a few different parts that you might recognize. So Square, the payment processor, Afterpay, and then also some other side things like Tidal, the music streaming service. And so that's currently up 16% year to date and about 8% since the start of the month. When I was looking into this growth, the main kind of cited reason for the recent growth is an expansion on their buy now, pay later service, Afterpay, as they've noticed that American consumers have started to have less consistent pay cycles, the rise of gig work and such. And so that's, they believe, a chance for expansion on being able to offer their buy now, pay later services. And then one other thing that kind of drew me to it is that I was thinking a bit more long term. As we've seen, the Australian government bring in measures to make housing look like a less attractive investment. I was thinking potentially that other countries may follow with this. And who's positioned to be a winner there is potentially a bit of a small business revolution. And when it comes to small businesses, I feel like every cafe I walk into, it's always a Square payment processor that I'm tapping on to pay.
Yeah, great. You mentioned Afterpay, one of the Australian success stories. Buy now, pay later was a word that you heard all the time during COVID here in Australia. So buy now, pay later is still really popular with customers as a source of payment.
Yeah, I guess because it is something that really started off in Australia, we've been a few years ahead of the curve. But in the US, it's really exploding, and there are a lot of big players because it is such a large market. But Block, through Afterpay, has positioned themselves quite well as one of the main players. And so, as that does kind of expand, I think they're well positioned to have some growth and benefit off that potentially.
Yeah, great.
That's all the time we have today, but for all things stock, news and trading, head to ig.com/au.